Price, that's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Welcome back. I'm Hayden Brain, and you're listening to Opto Sessions, where we interview the top traders and investors from around the world, uncovering their secrets to success. Last week, we hosted our second live interview on Twitter Spaces, this time with biotechnology investment expert and pioneer Brad Loncar. Brad is the creator of two Nasdaq-listed funds, the Cancer Immunotherapy ETF and the China BioPharma ETF. And as a result, we focus on oncology innovation and Evergrande's impact on Chinese biopharma. But to kick off, listen out for Brad's views on Merck's game-changing AntiCOVID pill and whether, after an uninspiring year for US Biotech, investors should be optimistic heading into Q4 and beyond. Enjoy. Hi, Brad. How's it going?
Hey, Hayden. Hey, Sophie. Thanks a lot for having me. I have to say, your timing is impeccable. We picked a great day to do this with the exciting Merck news, and I'm really raring to go. And thanks for the invitation. This is actually my first Spaces event. I do regular clubhouses, but I've first time here, so I'm looking forward to it.
Yeah, great. Oh, well, let's kick off with that Merck news then. It seems to be the obvious place to start for anyone that isn't aware. They've developed an antiviral pill which has been found to reduce hospitalizations and deaths by half in COVID-19 patients. Merck shares jumped around 9% overnight, I think. But what impact do you expect this to have on the wider industry, Brad?
Well, this is truly great news and truly really important. A lot of the Wall Street analysts are calling it a game changer. I wouldn't quite go that far because we've been burned by that term when it comes to the pandemic many times through the years, but it's very important because one thing that the last year has taught us with the vaccine rollout, especially in the United States, is sadly our vaccine numbers are not where they need to be. There's skepticism out there, and it's really hurt our ability to put COVID and especially these new variants to bed. And so we really need more tools to fight the pandemic. And one of those tools has always been the antibody treatments. That's Regeneron and Eli Lilly and Vir. The problem with those, though, is that they're an infusion. And when the efficacy results of those came out, which are kind of like more like 70% of keeping people out of the hospital or dying, we really thought that was going to be a game changer. But for almost an entire year, they really weren't utilized at all, sadly, because our government is so inept. Nobody thought about how to distribute those and roll them out properly. They were sent to hospitals, but the whole point is to keep you out of the hospital. And it's not until recently that governors around the country have started creating antibody infusion centers and things. But the thing that's great about this news is this is a pill. This is just a regimen of about 10 pills that you would take over the course of a few days. And so, anybody can do that. So it just really changes the game in terms of the convenience and the logistics and the ability to roll this out. And, I for sure would say this doesn't mean that you shouldn't get vaccinated. I don't want to give medical advice to anyone, but those vaccines are truly amazing products. And that's really how we get out of this one day, is to keep increasing our vaccination rates. And this is not a substitute for that, but it's good to know that if you have a breakthrough case or, if you are unvaccinated and come down with COVID, that there's a more convenient, therapy here that looks efficacious and safe.
Yeah, completely. When I first read the news, it seemed to me that given that all currently approved treatments need to be given as injections or IV infusions, as you were kind of alluding to there, it's actually the scalability and the ease of distribution that sets us apart from the currently approved treatments. Would that be fair?
Yeah, and in fact, the companies like Regeneron are actually working on subcutaneous version of those antibodies. So I think those will eventually reach the market, but still even there, a pill is just, so much easier for most people. So this changes things a lot.
Yeah, exactly. Okay, great. Well, how about the US biotech sector at large then, if we expand the sort of conversation to focus on US biotech companies? COVID obviously thrust this sector into the spotlight over, 18 months, nearly 2 years ago now. But should we expect continued growth in the sector heading into Q4 and into next year?
Well, it's interesting. So biotech is down a lot today, and some people might be surprised by that, but I'm really not. And biotech has actually had a terrible year this year, and not a lot of people outside of our sector know that. And one reason for that is because all of the headlines that you've seen this year are, about Moderna and BioNTech and Regeneron and these huge companies. And one of the primary benchmark that we use for biotech is the IBB ETF. So that tracks the Nasdaq Biotech Index. And that's a market cap weighted fund. And those large companies like Moderna and BioNTech and Regeneron that have just had incredible years have really driven the performance of that almost single-handedly. So that fund today is up like 4%. It was up, if we were talking like a couple weeks ago, it was more like 10 to 15%. So a lot of people have seen that IBB given its visibility and thought, biotech's having a decent year. But if you look under the hood, the opposite is really true. And one thing I would recommend for non-biotech experts out there, if you're trying to gauge what's going on in the sector, because like most people like to trade like, medium and small cap biotech companies if they're looking at individual stocks, look at the XBI. So that's also a very large biotech ETF, but it's equal weighted. And therefore, the medium and small cap companies are the things that really drive its performance. And it's having a terrible year. It's down like 12% year to date. And so, everyone out there is seeing these positive headlines and seeing things like the IBB being up, but I have to say the average biotech investor out there is in a very sour mood. It's been a pretty terrible year, but I'm not surprised that we're having a bad year. Like, you also have to kind of look at what the situation was coming into this year. So like last year, in 2020, that XBI was up 48%. I mean, that's incredible, especially in the middle of a pandemic. And in 2019, it was up 32%. So it had two like really incredible years. And COVID was on the front page of every news site, and has been for the last year and a half. And there's a lot of new like biotech investors out there, people throwing money at the headlines. And I think that created a bubble in our sector. And, I'm a huge fan of like the ARC funds and Kathy Wood. Like I'm really in awe of what they've built. They've got great products out there that have great performance, but their biotech fund, ARC Genome, an amazing statistic, middle of November of last year was a $3 billion fund. And 3 months later, $13 billion. It grew by $10 billion in 3 months last year. And biotech is not a large enough sector. And individual biotech companies, like the ones that fund held, do not have the scale that tech companies have to be able to take in those kinds of inflows. Like, one thing that I think that people don't really understand about ETFs is even if you have an actively managed fund, the money that flows in and out of your fund is totally out of your control and how it goes into individual companies. So if you have 10 billion flow into your fund, whatever company you have at a 10% weight is going to have $1 billion of inflow of cash like flowing into it. And that happened over a 3-month period to a lot of very like, sexy like CRISPR and genomics type stocks. That is one thing that I think really set up a bubble that burst in mid-February. And now we're kind of dealing with the hangover of that. So we have to appreciate that we had 2 really good years coming into this year. And we were really at lofty, arguably bubble levels in especially certain types of stocks starting the year out. And so now we're dealing with that. And then, add to that the fact that you have a totally new administration in Washington. And our sector is highly regulated and highly impacted by policies in Washington. And I think we're all still trying to feel out what's going to happen. So, for example, in February, there was this headline that the FTC was going to start scrutinizing pharmaceutical mergers more, and everyone wanted to figure out like what that meant and how that might impact our sector. Then you have like drug pricing in the news and important intellectual property topics in the news. So there's been a handful of things that have kind of piled on to, I think, the lofty valuations that we started the year at, that it's just taking a little bit of sorting out. So I don't think there will be any magic wand that's waved and everything will be better, tomorrow morning. I think we still have like months ahead, at least, of, everything settling. But I think we are finally getting to the point where you have some really great companies that are getting lost in the mix, that, are truly undervalued and have been dragged down with the sector lately. And last thing I'd say is, there's been over 100 biotech IPOs this year, and there were about 75 last year. Like, the number of biotech companies is up multiples over the last decade. And over the long term, that's a good thing. But over the short term, it's brought in a lot of money that it's really hard for these companies today to be efficiently priced. And so I think just all of the supply of new companies and new IPOs and, all of that, grabbing for people's attention is just, making things really rough out there. So it's going to take time for all of that to sort out. Anyway, that's a long answer, but that's kind of how I feel. I guess the short answer is, I feel like, biotech's in a very special place from a science standpoint. We had 2 really great years coming into this one. We were at lofty valuations, and a lot of factors have really held that back. And I think that we're not through that yet. But the long-term outlook of our sector couldn't be more exciting. I mean, the things that are happening in science today are just incredible. And you're seeing that through like gene editing and some like really cool data that's been out earlier this year.
Yeah, thanks, Brad. I mean, that just brings to mind a question then that there is a lot of noise out there, and that's contributing to maybe overextended valuations in some biotech companies, a lot of inflows into ETFs, as you said. How do you sort of turn down the noise? How do you tune out the noise and get to the true value of some of these companies that are being massively hyped and potentially overhyped, as you're alluding to?
There's really no shortcut. You have to do your homework. If you're going to pick individual companies, which most people should not be doing, like picking individual biotech stocks is the riskiest, most, volatile thing you can do in the stock market. But to really uncover, some of those stories, you have to be like somebody who has knowledge of science in the industry and to do a lot of homework out there. I do think, and I'm in this business, I do think that there's a lot of new great products out there that also, help the general public make sense of the sector. And the thing I would say about that is, a decade ago, there was like 2 biotech ETFs, that IBB and XBI, essentially. I mean, there were a couple others, but like they're all the same. They're very broad, very generic, very hard for a non-biotech expert to understand. And that worked very well like a decade ago, when everything about the sector was basically working. But biotech investing has changed. Like, you don't think of the tech sector as one monolithic thing today. You think of like semiconductors and social media and software and things as like different industries. Some of them are high innovation, high growth, and some are low innovation and low growth. And biotech today is exactly the same. Like, there's areas that I think you want to focus on, where the really, important science is happening. And I think there's areas you want to avoid, where there's only incremental things happening and, payers are pushing back. And corners of our industry that have real problems. And one thing that I think has changed for the better over the last 4 or 5 years is you have a lot of firms that have come out with products that help the general public focus on those areas more specifically. So the key to investing in biotech is investing in the best science. And there's now products like this that help you do that. And I think that's a good thing.
Yeah, absolutely. Well, I want to just quickly focus on oncology. I've got a couple of questions in that space before we move on to China, which I know is something that you're keen to discuss, and so am I. I mean, it's an extremely interesting region, to say the least, at the moment. But before we move on to China, it seems there's a quiet revolution underway in cancer treatment, one that those that aren't sort of intimately aware of that space may not have come across. And that's namely cancer treatment without chemotherapy. So genetic tests are used to screen for those where the treatment will or won't be beneficial. So firstly, how transformative is this revolution, or evolution, perhaps more accurately, likely to be, do you think?
Yeah, there was a great article in the New York Times about that this week. I'd recommend that everyone check it out. And for sure, cancer today, the way we think about it is totally different than how we thought about it 5 or 10 years ago. And there's a handful of things that are changing it. One of which is using targeted therapies and genomics. The number one thing that companies are doing today and should be doing today is thinking about what is the right patient for this drug. It used to be that you thought of breast cancer as one thing and you developed a drug for that one monolithic thing, and you found out that didn't work, but maybe it worked in a subset of patients for some reason. And now today with genomic sequencing and other ways of using diagnostics and things, you can just tailor treatments so much more specifically to the individual patient and the individual cancer. So targeted therapies have had a huge, huge impact. Another area, which is really what I love and focus on the most, is immunotherapy, harnessing the immune system to treat cancer. And there's a lot of ways that you can go about that. It's not just one thing. And, one thing I'd say is chemotherapy will always be part of the equation. Not every cancer is going to have a non-chemotherapy answer. And, for a lot of things, and in fact, most things going forward, I think the answer is combinations. And in a lot of cases, chemotherapy is and will continue to be a part of that. But if you can hit cancer from many different angles, one of which may be a targeted angle, one of which may be getting the immune system to pitch in, and one of which still maybe even be partly chemotherapy, although there are many chemo-free regimens today. That's really where the future of our industry is going, is just hitting it from a lot of different angles for most types of cancers.
Yeah, if we take that immunotherapy space, then who's sort of at the cutting edge, at the vanguard of innovating treatments in that space at the moment? Which companies?
Well, for years and years, the leaders have been large companies like Merck. So the first group of immunotherapies that really had a huge impact and have really been foundational are what's called checkpoint inhibitors. People have wondered literally for 100 years, why doesn't the immune system not naturally recognize the cancer as something that's foreign and attack it? And one reason is because on a lot of cells, there's a protein called PD-L1 that's like a stop sign. The immune system comes up to it and sees it and just kind of turns around. And there were a couple physicians, Jim Allison at MD Anderson and a Japanese researcher who made that discovery. And there are now today what we call checkpoint inhibitors that basically lower those stop signs. And those have been foundational. And the sales of those drugs today is in literally the tens of billions of dollars. And that'll be a primary method of treatment for many, many cancers for a long time. Where things are starting to get really interesting today is something called cell therapy. That's a different type of immunotherapy where you kind of re-engineer the patient's own cells so that their own immune cells, so that those immune cells are able to better find and attack the cancer. One type of cell therapy is called CAR T. That's already made a huge difference in certain types of leukemias and lymphomas and is now approved for multiple myeloma. And the big challenge has been getting that to work in what we call solid tumors. And that's been a tougher nut to crack, but there's a lot of smart companies out there working on that. So those are the thing that kind of interests me going forward is some of these newer technologies like cell therapies. There's something called bispecific antibodies, antibody drug conjugates, a lot of exciting, new ways of, using the immune system out there.
Yeah, absolutely. Okay, well, firstly, I'd like to use this juncture for anyone that does want to ask a question. I've got plenty more that I want to get through, but obviously, if anyone does want to ask a question, just request to be a speaker, and Sophie will let you in, and we'll take questions from anyone that wants to ask them. But now we'll move on to China. We can't mention China, I think, without referencing Evergrande. I read the firm's financial whole is equivalent to a third of Russia's GDP. The bankruptcy has subsequently sent shockwaves throughout domestic and global markets, of course. So how, if at all, does Evergrande's demise affect Chinese biopharma? Brad, what's your take on that?
Yeah, so I'm definitely not an expert on Chinese real estate, that's for sure. One thing I would say is in the years that I've been focused on China, and before COVID, I traveled there 10 times. So I think I'm not I don't know if I'd call myself an expert, but I'm pretty familiar with the country. In the years and years that I've been following it, there has never once not been a crazy story like Evergrande in the news. Like there's never been a single moment of calm. And so my reaction generally when I see those things is, we're talking about, 2 months ago, we were talking about the education sector. Then we were talking about, DD. And, today we're talking about Evergrande. And next month, we'll likely be talking about something else. Like people are already transitioning to this power story. And that's just the nature of China. Like it's an emerging market and it's just crazy in that way. As an investor, if you're looking for calmness and tranquility, China is not the place for you. But what I would say is an important shift is going on there. I think the much bigger story is what's happened to the tech sector there. And that's really huge. So the tech sector, there's a huge fund here, KWeb, that I think is now the largest China ETF in the world. It's down 40% year to date. And investing in tech in China for the last decade has been an amazing thing. So many companies have grown and so much money has been made out of that. And I personally believe those days are over. For the people out there that, believe that China tech is going to bounce, I think are in denial. And the reason for that is the thing that really set off a lot of these headlines was the Ant Financial IPO that got scuttled early this year. And that was really a game changer because I think the problem that tech has going forward is the Chinese authorities there view the companies and the way they've grown and become, powerful and in front of everyone's lives. I think that the Chinese authorities view those companies as both a political threat and an economic threat, as especially something like that, financial being too intertwined to the traditional banking center and things. And, Jack Ma, what really set this off is, he said something that in a conference that, in China is is fraught with, is fraught with risk. And I think that was really a red line for the government there, and they brought the hammer down on the entire tech sector, and I think it's going to be down for a while. And so ever since then, everybody's been asking themselves, what is the next shoe to drop? Is healthcare going to be the next shoe to drop? And I don't think it is going to be, because it's not a political threat in the same way that the tech sector is. The biotech sector in China, number one, is just beginning. Like, the elevator pitch story on China biotech is, before today, there was no biotech sector in China, and today there's a boom and one being created. And it's where the tech sector was a decade ago. And another really important difference is China biotech companies, unlike the tech companies there, are going to be global competitors. There's 3 Chinese PD-1 inhibitors that are in front of the US FDA right now, and that's just the beginning. Like the DDs of the world, those are just domestic companies that don't really have, any meaningful business outside of the country. The biotech companies are going to be global competitors. And the third thing is, look at how COVID has woken up like everybody to how important this sector is to society. And, it's clear that this is an industry, not just in China or the United States or Western Europe. It's clear to everyone throughout the world that this industry is important. And everybody is, thinking about how do we, start investing and building up biotech. And so I think there's a lot of key differences between biotech and the tech sector. And again, something like Evergrande that's in the news today, could it, crash and cause things? Like, I'm not a real estate expert, but what I know in my experience is, for years, there's always an Evergrande story in the news. And, my guess is that there will be something new next month.
Yeah, completely take your point about the kind of political nature of the tech sector not necessarily being or characterizing the biotech sector, I think, is a really important one. It did make me think, and perhaps other international investors think too, that bankruptcy was obviously characterized by the excessive debt and a lack of income or assets that Evergrande were actually able to generate. And that was largely consistent with the real estate industry at large. But to what extent can there be parallels drawn between that aspect of the real estate industry with Chinese biopharma? Like, are there lots of companies within Chinese biopharma that are operating with large amounts of debt and a lack of income or assets? Or is that not a parallel that can be drawn?
Yeah, it's not a parallel that can be drawn. All biotech companies are cash incinerators, essentially. Like, pharmaceutical R&D is very cash intensive. That's why biotech companies list on the stock exchanges so early in their development, because they constantly need to raise cash. And, venture capital firms and, PE firms are great for, getting them to a certain point, but eventually you have to get to a point where, you had some news event and you can snap your finger and raise money in 48 hours. And it's really only the public markets that can do that. So biotech companies, nobody would ever loan money to like a bank wouldn't loan money to a biotech company, because they just incinerate cash. And, many of them, if not most of them, operate for a decade or more before they have any revenue coming in. So it's an all cash R&D based business for many, many years before they hit commercial stage.
Yeah, okay, makes a lot of sense. So another key event, I suppose, that happened in the region was the rendering of Chinese after-school tutoring companies as non-profits, and maybe that was the realization of the worst fears on behalf of international investors in terms of investing in Chinese companies. It struck me that actually government support is kind of part of the investment case for Chinese biopharma. I mean, you've got initiatives like NMPA, you've got Made in China 2025. But how likely is it that the Chinese government could flex their regulatory muscle and actually structurally impair the biopharma market? Is there scope for something like that to happen? Or do you see Chinese government support for the biopharma industry sort of reigning supreme, I suppose? What's your take on that?
Yeah, so there's always, especially in China, first of all, in investing in general, everything is fraught with risk, especially in biotech. And anything in China, to some degree, is exposed to that risk. Like the risk of government intervention in China is never zero, and it's never single digits, probably for anything. But I do think it's different in this case because the government there already has a huge lever. So with the education thing, education is very competitive in China. And those for-profit education schools, number one, were very expensive and became very expensive. And it started to create an element of the haves and the have-nots. And the government viewed that as like a threat to like class stability. And so that headline was, really dramatic. They basically waved a magic wand and said this for-profit sector is no longer going to be a for-profit sector, so that more people have equitable access to it. And that's a huge thing. Like, investors were right to start thinking, oh my gosh, like if they could just literally eliminate a sector like that overnight, will that happen to ours? I don't think that will happen to healthcare and biotech because the government there already has a huge lever to regulate not just the industry, but the prices that the industry charges. So today, China's healthcare sector, its pharmaceutical sector, is kind of ultimately the one-payer system. Like there's very little private insurance like we have in the United States and Europe. Like even wealthy people with great jobs, in part at least, rely on government payment for healthcare services and pharmaceuticals. And the government there has something called the National Reimbursement Drug List. So once your drug is approved, you work really hard to negotiate with the government to get on that NRDL. In fact, one CEO there once told me, this is so important. If you're not on the NRDL, you might as well not have a drug. And it's a very intensive negotiation, and prices in China today, relative to what we're used to in the West, are dirt cheap. So, for example, a cancer drug, like one of those big immunotherapy drugs here in the United States, Keytruda, the list price of that is like $170,000 in the US. And the NRDL price in China is less than $10,000. So it's just like day and night, like totally different, like planet. And so the government already has levers like that that it can pull to impact any class or health disparities like you saw in the education sector. Now, does that mean that they won't pull that lever harder, or they might not, they might do some other drastic things? Like, no, those risks always exist for sure. But I do think it's a totally different story. And because biotech is such an R&D intensive business, if you don't pay for drugs, you will not have a robust drug sector. You might not have a drug sector at all. And again, like in the context of them trying to build one to begin with, and also under the environment of COVID has woken up the entire world to how important this industry is, I'd be very surprised to see them do something that would put, this emerging biotech sector that, that is kind of still in the very early stages of launching there at jeopardy. That would be contrary to their own good, I believe.
Yeah, great. Well, if I could just finish by asking for your outlook on the Chinese biopharma sector, then what's your outlook for, heading into Q4 and then into 2022? Are you relatively positive about what's to come from that sector, despite all the headwinds that we've discussed?
Yeah, I think especially the first quarter of next year is going to get really interesting because up until this point, China biotech has kind of been a out of sight, out of mind story to most people, not just investors, but just a lot of people in like the biotech industry in general. That may change a lot early next year because some of those Chinese drugs are likely to get approved, and One thing I've always believed is that China coming online in biotech and the fact that like the tradition in China is like, high volume, low price business model for pretty much everything. I think that could be very disruptive to our industry. And for example, Eli Lilly is taking one of these cancer drugs that it's partnered with a Chinese company, Innovent, on. And it's in front of the FDA right now. And the FDA is slated to make a decision on it in March of next year. And a week ago, the head of oncology at Eli Lilly said, if that's approved, we plan to be pretty aggressive about competing on price. And in this case, it would be against the market leader, Keytruda, in lung cancer. So we'll have to see what price they choose. But price competition is something that has never really been a thing in the US. I mean, cases have happened, like hepatitis C drugs have seen limited price competition that has driven down prices. But you've never really seen any like front page news stories. And I think this could be one. And so we'll have to see how low they go on price and if it ends up, in fact, being effective. And I think that will be a wake up call to our entire industry and to biotech investors everywhere, because those types of drugs are just the first thing. Like eventually these companies are going to be competing on what we call first in class and best in class medicines. They're at the forefront of a lot of important technologies like cell therapy and bispecific antibodies and antibody drug conjugates. And I think that if they're successful on kind of shaking things up in the PD-1 space, I think it's just going to be like an opening wake-up call for a lot of different classes of drugs going forward, and could be pretty disruptive to our industry. So those types of headlines, I think, will start happening early next year. So I'm looking forward to seeing how all of that unfolds.
Yeah, absolutely. Well, we'll watch that space closely. That was absolutely fascinating, Brad, particularly your insights on China. It's a market that's occasionally difficult to get under the hood of. So to hear from an expert on that market was fascinating. I'll hand over to Sophie now to read a short outro. But thank you to everyone who joined from myself. It's been a real pleasure. Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends, and in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.
Co-Fruition.